Hey everybody, Dan Artis here with your weekly market update, where I break down what's really going on in the economy and the housing market without all the unnecessary fluff. So here we go. This week, we got new inflation numbers and some interesting trends in housing, along with some signs that the economy might be slowing down. So let's dive into what it all means. First, let's start with inflation. The Federal Reserve's favorite measure of inflation, called core PCE, or core personal consumption expenditure, just came out today. Now, don't let the fancy name scare you. This measure leaves out food and energy prices, which tend to bounce around. It's what the Fed watches to see if inflation is truly cooling off. Now, in May, it rose just 2%, which is slightly higher than expected, and 2.7% compared to a year ago. So it's still coming down, but not quite as fast as the Fed would like to feel totally confident just yet. So what does it mean? Well, we're likely still on track for rate cuts later this year, but the Fed is still being cautious, and they've been cautious for a long time now. So let's talk about housing next. And the numbers are kind of a mixed bag. So new home contract signings dropped a bit, nearly 14% from April to May. That's a sign that buyers are pulling back somewhat, probably due to higher interest rates and limited inventory of available homes. But on the flip side, closings on existing homes actually went up slightly in May to an annual pace of 4.03 million homes, which beat expectations, even though it's still the slowest May that we've seen since 2009. Let's talk about housing inventory. We saw an increase in existing homes for sale, up 1.54 million units nationwide. Now that may sound like a lot, but let's keep it in perspective. Before the pandemic, we had way more homes on the market. And during the housing bubble in the mid-2000s, we had around 5 million homes for sale. So we're way below that, obviously, at the 1.54 million unit range, which is for sale right now. This ongoing shortage is one of the reasons why home prices are still going up, even with the higher interest rates. So now, speaking of prices, the latest reports show that home values are still climbing steadily. Case-Shiller showed home prices rose 2.7% year over year. The FHFA index showed prices were up 3% from this time last year. So while things are slower, prices aren't crashing. In fact, in most areas, they're still going up. Now on to the broader economy. Jobless claims are still creeping up, and nearly 2 million people are still on unemployment benefits. And we just got the final report for the first quarter of the year. The U.S. economy actually contracted by 0.5%, meaning that the U.S. economy shrunk a little. So the good news, most analysts are expecting a bounce back in the second quarter, and we'll get those numbers at the end of July. So what does all this mean? Well, we're in a market that's shifting, but not collapsing. Opportunities are out there, even if you understand the trends and move strategically. Now, if you're thinking about buying or selling or just want to explore your options this summer, reach out. I'm always here to help. And if you're in Bakersfield or anywhere in the United States and want mortgage advice with zero fluff, subscribe to my YouTube channel now, as I've got new tips every week.